Nilesh, thank you for joining us. It's fantastic to have you here. Last time when we met in your office, you were mentioning about this theme which you were very positive on, about the shift from unorganized to organized sector. So we thought, why not just do a little bit a few minute clip on this theme. So two reforms, very landmark reforms by the government, demonetization and GST. How do you think this is going to impact this shift?
So long back, French novelist Victor Hugo mentioned that there's nothing more powerful than an idea whose time has come. And we think, apart from GST and demonetization, there are two other factors which is driving this change of unorganized to organized. Clearly, there are many businesses where the trade channel was dependent upon cash. Now with demonetization, those guys are moving to formal digitization. Now those trade channels will not be able to support unorganized sector like they were before. So this is a very powerful change. The GST will take away the business model of arbitraging through tax. Now these two are clearly supporting shift of businesses from unorganized sector to organized sector. But there are two more factors which are also silently aiding this. One is the brand consciousness. I mean, clearly, as the per capita GDP goes from $1,500 below to above $1,500, people are accepting brands, people are becoming conscious of brand. The brands will be created in organized sector, not in unorganized sector. The second thing is advent of online marketplace. Now, if you are going to buy things on an online basis, you will require a brand, you will require something which you can relate to. That positioning will again come from organized sector, not from unorganized sector. So combination of GST, demonetization, along with the brand consciousness and online participation through marketplace, all these things are creating a powerful trend for unorganized to organized. This is almost akin to how we moved from, say, a dabba theatre to multiplex. So we believe this is a multi-year trend. This is how economies over the world has evolved, and India is no different. This is a multi-year trend which is about to emerge in India.
I agree with you, Nilesh. I think GST and demonetization have only hastened this process of people moving to brands, but just wanted to get a sense, how big is this unorganized sector now, and what do you think where this will be in, say, 5 years from now?
So if we see in India, it is mom and pop shops which are driving the retail. The organized retail is in barely evolution stage, and this trend is there across various sectors. On an overall official GDP basis, my guess is that the organized sector is contributing probably between 15 to 20%, whereas almost 80% is still in the unorganized sector. Now it can vary depending upon different sector to sector. In auto, 100% is organized, but in auto components, including the replacement, probably 60–70% is in unorganized sector. So clearly, with the advent of time, with the forces of GST and demonetization, we will see unorganized sector getting replaced by organized sector. We will see brands emerging. We will see consumer driving towards quality, towards brands. And all these things will create a situation where slowly and steadily the growth rate of organized sectors will be probably 2 to 3 times faster than the unorganized sector. Over 5 years time frame, unorganized sector will be still critical for India. It will still be large, but hopefully from somewhere around 75–80% today, they'll probably decline to maybe under 50%.
Nilesh, can you illustrate some anecdotes which probably tells our viewers, how this shift is happening and in what form?
So post demonetization, we met companies across various sectors. In ceramic tiles business, the leading company told us that, look, with demonetization, the volume growth could taper off in December quarter by 10–15%. By the quarter end, they actually showed marginally positive volume growth. And the reason was that out of about 650 odd tiles making units in Morbi, almost half of them were shut. So the demand which was being met from Morbi got shifted to this tile manufacturer's lower end of the product, and they could register marginally positive volume growth instead of negative growth. This trend will accelerate in days to come. We were speaking to organized retailers. All these people were happy to accept Paytm kind of digital payments, or they were accepting credit cards, or their ability to manage cash was probably higher than mom and pop shops. And we have seen in the demonetization phase, all the organized retailers have shown volume growth, whereas the mom and pop shops in malls, on high streets, on roads, they all have suffered negative volume growth. So consumers shifted to organized retailers because they were experimenting with the payment mechanism. We went to a textile manufacturer. His fabrics were earlier sold to wholesaler in check basis, but wholesaler to semi-wholesaler to retailer to consumer was going in cash. Now they had to shift their entire production to exports because the local markets were not able to move cash. Now their production is going more to the organized manufacturers of fabric who are converting that into garment, then going through trade channels into mom and pop garment makers. Clearly there is a shift happening from mom and pop shops to the branded garments. And this kind of trend is visible across many companies. So we are seeing anecdotally across various segments that organized sector is gaining market share over unorganized sector, partly because unorganized sectors don't have access to finance, partly because now they have to make payment of salaries and wages in check, whereby the chitti wali salary and the paid salary difference they have to manage. Earlier they were not contributing to PF, they were giving lower than minimum wages, now that's no longer possible. Third, the trade channel disruption has occurred, so cash payments has to be converted into white and you have to pay tax on it. Fourth, many companies are now preparing for GST, whereby earlier they were avoiding taxes, now they have to pay for taxes, which means their scale of operation changes. So all these things we are seeing today across our discussions with the management, and most organized sector companies are feeling quite bullish about future growth, not only by virtue of economic growth, but also by gaining market share.
So Nilesh, if one has to make a portfolio out of this theme, so what kind of sectors, we're not going into stocks, but what kind of sectors do you think will be a part of this portfolio?
There are apparent sectors and secondary or derivative effect sectors. The sectors where unorganized players today command over organized player are auto components, building materials like pipes, tiles, specialty chemicals. In textiles, both fabric as well as ready-made garments come under this category. There is a secondary market effect also possible, which is probably into financial services. Today, a lot of savings go towards financing small and medium enterprises on a Sharafi market. And while the rate of interest is higher over there, many a times principals don't come back. Now that savings, my guess is that will move towards financial firms, and financial firms will also benefit out of this unorganized sector moving to organized sector. I think we'll have to keep an open mind, and we will see emergence of organized sector developing across various categories of sectors over a period of time.
Thank you, Nilesh, for joining us, and as always, thanks for enlightening us on this theme. Thank you.
Thank you.